Well, it's time now for a business update with Charles Pellegrin. Hi, Charles.
Hi, Karis.
Let's start then by checking in on the oil market, see how it's responding to developments in the Iran war.
So there's been a lot of volatility when it comes to oil. The Brent and West Texas Intermediate, both global benchmarks below the $90 a barrel mark currently. The latter had gone up to $120 a barrel on Monday before dropping to below $80 on Tuesday. Every new statement by Donald Trump or any other stakeholder potentially sending those prices moving up or down. One of the big market moving events in the past day was the International Energy Agency reportedly proposing the largest ever release of crude oil from its member states' strategic reserves. And Brian Quinn has more on that.
Energy facilities across the Persian Gulf region under attack, key shipping arteries effectively blocked. The U.S. and Israel's war on Iran has sent crude oil prices on a wild ride, prompting the International Energy Agency to prepare decisive action.
We asked the International Energy Agency to work on numbers, to update the stockpiling data. Everyone's aware of the situation. Everyone's willing to stabilize the market.
In the past week, international benchmark Brent crude has seen price volatility hit its most extreme level in years. The Wall Street Journal reports that the IEA is now floating the largest ever release of oil from the estimated 1.2 billion barrels in the strategic reserves of its 32 member states. Over its 4-decade history, the IEA has coordinated 5 strategic releases. One in the run-up to the first Iraq War, one after Hurricane Katrina, one in the 2011 Libya crisis, and 2 in 2022 following Russia's full-scale invasion of Ukraine. Those last 2 releases together totaled some 182 million barrels, the current plan set to exceed even that amount.
It might not be a like-for-like replacement, will still have a massive effect on the global economy, and would definitely try and keep a lid on oil prices as well.
Shipping blockages and refinery shutdowns due to the war have forced Gulf Arab states to slow production by some 6% of global output as storage space runs out. It's not guaranteed that a strategic release will have the desired effect. 2022's actions actually saw crude prices rise short term, as traders initially took them as a sign that the crisis was even worse than they had feared.
Meanwhile, Charles, the situation in the Strait of Hormuz isn't really changing. Tanker traffic through the waterways halted for the most part.
So that question of how to move that fifth of the world's supply, which transits there, keeps hanging over everything. And Iran knows it holds important leverage in that area, which makes the reports that it's looking to place naval mines in the waterway very important to look at. Reports given credence by the fact that the U.S. has sunk 16 Iranian mine layer vessels on Tuesday. U.S. media outlets CNN and CBS reporting that a few dozen mines have been laid in recent days and that Iran, in spite of the U.S.-Israeli attacks, still retains more than 80% of its small boat and mine layers and could easily lay hundreds of mines in the strait. Estimates of Iran's stockpiles of naval mines range anywhere between 2,000 and 6,000.
So what would mining the waterway mean exactly?
Well, in addition to the threats that we are hearing currently from the Iranian Revolutionary Guard Corps that they would set ablaze any tanker attempting to cross the waterway without its permission, the mines could further disrupt shipping by sending insurance rates surging even more or even forcing insurance companies to scrap coverage entirely. In addition to enforcing an effective blockade, it would also provide Iran with more control over any passage of ships remaining, using the mines to force these ships into particular lanes that would be better able to supervise.
Which leads us to our last point. There are still some ships going through the strait.
And Iran is the one deciding who gets to go through and who doesn't. And they're giving privileged access to sanctioned shadow fleet tankers appearing to bring oil shipments to China and India. That's what data from tanker tracking firms like Kepler is showing us. These tankers often fly fake flags to turn their transponders off and communicate directly with the IRGC while crossing using loudspeakers or even shortwave radio. This, in effect, means that Iran is currently exporting more oil currently than it was before the war started. Over the past 6 days, tankers have loaded a daily average of 2.1 million barrels of Iranian crude on the coast of the country, compared with a daily average of 2 million for the month of February. This also means that the financial lifeline of Chinese oil purchases that Tehran had been relying on is still, to a certain extent, alive and well.
All right, well, let's finish by taking a look at the stock markets.
Well, let's start in Asia, where the Nikkei in Japan and the Kospi in South Korea have continued their rallies, started on Tuesday and closed in positive territory, while the Hang Seng in Hong Kong is just under a half a percentage point lower, approaching the close. European bourses at the open trading in the red, though. This as the UK Maritime Agency says that a container ship was hit by a projectile off the coast of the United Arab Emirates, and after another cargo ship was hit in the Strait of Hormuz, and also after confusion with regards to the US saying it had successfully escorted a tanker through the Strait of Hormuz before retracting that statement.
All right, Charles, thank you very much for keeping us abreast of all the economic news of the day.